Good afternoon, everyone. See if this works. Hi, I'm Dan Morgan, Head of Policy and Regulation at Innovate Finance. For those of you that don't know who they are, we are a membership association for FinTech, financial technology, and obviously, as we've already discussed, I won't run over what everyone already discussed so far, so I'll keep it snappy. That's everything from large financial institutions right down to your pre-revenue, pre-seed startups, which are in our membership base. Sectors include everything from payments, analytics, blockchain, cryptocurrencies, retail banking, investment banking. It's across the piece, it's everywhere. But as already been mentioned by Bjorn and others, FinTech's been around for a long time, 1.0. I was at a conference recently with Andy Haldane from the Bank of England, and he showed a slide, Google Analytics slide, to show the term FinTech and when it appeared and started to appear around 2013 and just shot through the floor. And this was the rise of the disruptors, the B2C, the partial disruption on the rails. That's where the term FinTech has suddenly arisen and why people are now interested in the topic. That doesn't mean to say that's only the whole story. We've talked a little bit about Europe and talked about where the activity is happening. There's been some figures today. Well, in terms of VC, which tend to be investing in the B2C, most of the activity has been in the US, obviously due to volume. Also, China has been taking the lead as well. But in Europe, the UK has been a standout market. So on the next slide, we're going to talk a little bit about why. Is it a particular policy goal? Has the government there decided to support that and what the regulator's been doing? And is there lessons for anywhere else? Maybe not, maybe some risks. Some of the figures here also point to Germany trying to take the lead, but this is particularly VC. But as Bjorn mentioned from the City report, that's got 19 billion invested last year as well. But that's looking at corporate venture. So that's a very new important player coming into the market. This is particular VC. So this is the API work, the accelerator, startup bootcamp, which is backed by Lloyds, MasterCard, Barclays, Techstars, etc. Very hard to measure. The funds are announced, but where they're deployed is much more tricky to actually monitor. But I just point out to say that the UK has been aware that a lot of the investment has actually been happening in FinTech. So why is that? Well, there's obviously lots of reasons. It's got a very large financial services sector, biggest in Europe, but also there's an active decision from the government to support it. A lot of that comes down to a competition mandate. They want to increase competition in retail financial services. In retail banking in the UK, for SMEs, it's 85% of accounts are in the top 4 banks. For consumers, it's 75%. This is a highly concentrated market, and the government actively decided to support particular initiatives to try and encourage more competition. And you see where the investment has gone in terms of sectors. These are the areas that have been supported. So in the UK, peer-to-peer lending, which is in debt-based, well over 75% of the European total, has been actively supported through full authorisation, which the industry itself lobbied for. There's a particular policy legislation at the moment which will mandatorily refer those refused credit at the bank to an online platform. They've also just recently introduced, or will be introducing soon to those authorised, a retail ISA. So people are encouraged to put their own money to invest in peer-to-peer despite some of the risks which have been highlighted. So actively supporting that. There's also things like the FCA's Project Innovate, which is the manifestation of the competition mandate of the FCA, which is specifically designed to encourage competition, look at new business models, try and understand where the new, the issues may be, to actively support them. So it's even on the side of risky in terms of other European regulators, but also to try and support the broader public policy goal of competition in financial services. Other areas in particular as well which have seen investment around has been digital challenger banks. Again, there's a startup unit being created, there's fast tracking to get through the whole process, lower capital requirements, for again an active policy decision of 15 new banks within the Parliament. So these are actively going out there. The finance has followed where the regulator and where the government is trying to support particular initiatives, and that's where it's followed, and the B2C, partial disruption on the rails. We'll talk about whether these is a good idea or not later during the panel, but it's been a particular active choice by the government there. So what next? Well, the next thing is it's going to be different. It's not just going to be B2C. And I'll also mention that the B2C is actually still quite small. It gets a lot of headlines, but take, for instance, debt-based peer-to-peer lending is under 3% in the UK. It's still not systemic. It's still very small. So perhaps the risk is worth it. But also, if we start to change, we see that it's looking into other areas where there is a market failure. To take, for instance, investment or pensions in the UK. If you don't have a certain, well under £100,000, you can't afford advice. Technology is looking to step into that role, but it starts to brush up against much more regulated areas such as MiFID suitability rules, the whole advice and guidance piece as well in the UK and Europe. We're starting to look at that through the Financial Advice Market Review again to try and loosen some of them rules, and new players are stepping into that breach. Again, approaching Project Innovate. A Financial Freedom of Information request shows that 39 firms, during the review were looking to try and push new business models through. And the FCA is also setting up a sandbox approach. One of the areas they're going to look at is around robo-advice, and is in particular any models we can support to do that. So again, it's starting to change. It's B2C, but it's much more regulated areas, unlike payments. And then finally, I suppose, it's coming into the infrastructure. What does blockchain actually mean? Everyone talks about blockchain, and is it payments? Digital currencies was the first wave, but this is infrastructure plays. And this is going to change how the actual rails of the financial system potentially work. And a lot of the incumbents are working together to decide what that will be. So things like R3, Digital Assets Company, they're looking to decide how they run the same system between themselves on a new set of rails, so to speak. And this is a really open-ended question. We really don't know where we're going to get there, and the regulators and public policy don't know how to react yet, because it depends what you use the technology for. So technology FinTech is really going to change the other parts of the financial system over the next few years. I'm interested to talk about it today. I won't run over everything else because we have some great introductions already. Thank you very much.